Good evening, good afternoon, good morning from wherever you are. Welcome once again to Get It Right with Atara Solutions. I'm so excited to see all of us. I'm so excited to be a part of this. I've been away for the past 2 weeks. I really felt like I've missed a whole lot of activities and events that have been going on. The week before last week, we were talking about fundraising and resource mobilization. The week again, last week that I was not there, we spoke about how to be able to express ourselves, that is on ways to becoming an author. And here we are again today, we are learning about finances. Finances have been the talk of the day. Just before I give room to our speaker of the day, my name is Kevin Adipo, and I work with Atara Solution as a HR consultant, and I'm really, really privileged and honored to be here. Before we can start, allow me to give a shout out to our partners, the ones who allowed us to be here and to be able to air and reach out to you from wherever you are. First and foremost, allow me to start with Stallion Construction Company. Stallion Construction Company, they deal with, it's a construction company that deals with the subdivision of houses, buildings, offices, infrastructure, you name it. They do renovation, that is from your floors, from to your walls, to the subdivision of the office, however you like it. This is the expertise of Stallion Construction Company. We have Pathway Solution Services. As the name suggests, they help you find your pathway as far as your career is concerned. That is, it is a HR consultancy firm majoring in LMS. They offer their trainings via LMS. We thank you, Sir Frank, for always making sure that we have offers to our viewers. And at the end of these trainings, you will always have the opportunity to have a certificate. Their trainings, as I've mentioned, they're LMS, which means Learning Management System, and they're tailor-made to your timings. If you are one person who loves to do your trainings in the evening, in the morning, at night, you'll be able to do exactly that. We have Panessa Training Institute. This is a woodwork company. If you're someone who loves to work with their hands, this is the opportunity, or rather the place for you to be in. They do offer studies in carpentry, and if you so wish to find or major in carpentry as a part-time or a full-time job, this is the place for you. We have WeClean. WeClean is a company that offers cleaning services for the offices, houses, and you name it, malls, anywhere that you are working in or anywhere that you are at, and you feel that you need the space to be very clean, and yet you don't have the time or the resource for this. They are the company to go to. They do carpet cleaning, sofa cleaning, house and office cleaning. And the beauty about WeClean is that they have a machine. For those of us who like their carpets clean, they have a machine that does, can do cleaning on your carpet for only 6 minutes. How wonderful can life be? We have Suluhu Mediation Center. As the name suggests, Suluhu Mediation they do offer mediation services, that is in terms of training. if you are one person who loves to be a mediator, mediation is your passion, then this is the place to go to get your certification. And also they help you get, besides helping you getting the expertise of a mediation, they also help you on getting attachment and so on, just as a way to kickstart your mediation expertise. Kapula Mintito is our next organization. They help us have Mapochopocho. As we can all attest right now, we are getting into the rainy season, sorry. As El Nino is coming, tunapenda kukaa kwa nyumba, and we need, during this time, we also need something that at least can soften our hearts while we are at home. They will make sure that you have your mapochopocho in time and anywhere within the country. We have Profiles International. They are the only organization or company that does GINOS, that is Emotional Intelligence Certification within East Africa. They also have an offer for our viewers on DISC, which is personality test. So if you've not done your personality test, or rather you need to understand and know your personality, then this is the company to reach out to. We have Elsamere. Elsamere is a hotel located in Naivasha. The ambience, the food, my friend, is just out of this space. Elsamere, if you wish to go for a vacation, it is the hotel that you can reach out to, and they have also a special offer for Atara Solution viewers. We have Essen Park Limited, Labor Planet, and Human Capital Expertise. They are our partners also from Uganda. We have Steadfast Quality Solutions. And just before I can conclude on giving a shout out to our partners, allow me to also recognize Herbert Zake and thank him for making sure that we are inclusive, but we are in Uganda, and the larger part of Uganda can be able to reach out to us. Today's topic is none other than finance, the implementation of the Finance Act 2023 for the human resource personnel, the larger organization, and even the staffing. Everyone is concerned. How should we go about it? What should we do? The person to guide us through this is none other than Nickson Omondi, who is the manager, Digital Economy Tax Office within the KRA. I'd wish to go further, but I'll give him the opportunity to introduce himself and also just give us a guidance on this Finance Act 2023. Mr. Nickson, karibu sana.
Asante sana, Kevin. You confirm you're able to hear me clearly?
Loud and clear.
Wonderful. I think I've changed course. I'll present my screen, but allow me to quickly thank everyone who has joined this forum. Actually, we are moving away from calling you taxpayers to calling you our stakeholders and our customers. Okay, you are part of this country, and any positive step we make towards tax compliance is actually a step made in Kenya being a developed country. So I want to take this opportunity to thank all the organizers, Atara Solutions, and all the partners that you've mentioned, Kevin, and Grace for working tirelessly just to ensure that this session is taken in. Now, you've mentioned very good partners. I've actually picked the partners, and you're able to see that the partners are coming from a diverse, industries. You have hotels, you have a cleaning company, you have a furniture company. Kevin, by the way, Panessa was my first employer. I don't know if they can even remember my face now, over 15 years ago.
Wow.
There's an IT solution provider or providers, super, and also even a training, entity. So you already see that there are various sectors represented as part of the partners. So I think as we will be going through the material, we should be able to locate which tax affect us and how do we go about it. So because the Finance Act is one of the heaviest finance acts I've actually come across in my practice, I'll not go through every amendment that was done. I will just highlight a few key ones. I'm sure you, our members can get the presentation later for their reading, because the language is a bit simplified compared to the one that was prepared by the lawyers. Sometimes it's a bit convoluted in terms of English and syntax and sentences. And then I'll highlight those few provisions, and then we can get into Q&A. So I don't know whether that should give me about 30 minutes to 40. If or that will be too much, we can try 30 and see if we'll have 10 or so minutes for Q&A. And with that, Kevin, if you allow, then I'll just take it away. Allow me to share.
Definitely, you are in order to continue, Mr. Nickson.
Okay, so I don't know if I'm allowed to share screen. Okay.
You are allowed.
Okay. Let me see if it can come. It still seems not to allow. Okay. Not yet there. It doesn't seem to be picking.
Maybe because you are a co-host, you should be able to share screen.
I think we are there. Is it better?
Yeah, there you go. Yes.
Perfect.
Yes, wonderful. Yes. Good. And as always, allow us to say that where there's any inconsistency with what we are presenting, the law reigns supreme. So remember, KRA is just a stakeholder in part of the tax and finance journey, but the law is principally made by Parliament. KRA is an implementer of the different revenue acts as provided for under, of course, also the KRA Act. So quickly, I'll just go direct into, I don't want to do a lot of introduction, but you'll find a bit of it. Then we'll go into the Finance Act. What are the amendments, the key ones, and then we'll just conclude and then pick Q&A. So the Finance Bill was assented into law on the 26th of June. There's a whole process of how Finance Act is actually prepared and finalized. Remember, a Finance Act is a law that amends certain laws. So it's like a document that simply goes into some main documents. But of course, for ease of reference, we can always refer to the year in which the amendments happen. So the Finance Act will be prepared by Parliament, approved, then the President assents into it, which was done on 26th June. But if you go to the various acts now in the kenyalaw.org, you'll find the Income Tax Act, which is now incorporating the amendments that were brought by the Finance Act of 2023. And that happens with the various acts. So KRA, you'll see, is administering a number of acts: income tax, VAT excess duty, TPA, or the Tax Procedures Act, the Tax Appeals Tribunal. A portion of it touches on us, though we don't administer it. We also have the Miscellaneous and Fees Levies Act, the KRA Act, that is where KRA is anchored. And we also have a connection with the Employment Act. And I think this is one of the issues that have been mostly debated in our country, I think, in the recent past. And then we'll see others. So very important to note as our dear taxpayers, there are three key implementation dates, or some people call them effective dates of the various provisions. I might not mention every amendment and the effective date. So I will leave it to you. The Finance Act is available anywhere. The first portion of that Finance Act basically talks about which paragraph will be implemented when? Which section of the act will be implemented by which date? So we have 3 main dates, that's 1st July. So there are provisions in the Finance Act that are already operational by the fact that, or by virtue that, 1st July was the first year of implementation. We also have ones, the other provisions that came into being starting, that must have been last week, from 1st of September. And then there are others that are still awaiting, to be effective from 1st of January 2022. So this will be important also to note. So how the Finance Act is arranged is usually arranged based on the main acts which it amends. So you'll find that the first portion of the Finance Act, after looking at the introduction and the different effective dates, is the Income Tax Act. So the Income Tax Act, maybe for those who are not so technical, is the law in Kenya. It's a parliamentary law which defines how income is taxed. Some other people will tell you it is a form of a direct tax. This tax aims to charge the income of a person where you cannot push the burden of paying that tax to another person. So the opposite of income tax, or what we call direct tax, will be a consumption or an indirect tax. So there'll be the VAT, which we'll also look at. So the first portion of the Finance Act amended income tax provisions. And given that we have the HR professionals in this house, I think big time, this is where employment income is usually taxed. For those who love reading the law, if you go to Section 5 of the Income Tax Act, you'll find how payee operates and taxation of employment income for that matter. But this act entails several income streams. This is where business profits is taxable. This is where employment income is taxed. This act also shows us how property income, rental, royalties, leases, and all that are also taxed. It is also the same act which shows us if you transfer property, how does capital gains tax happen? If you are deriving income from a digital service provision, you are then taxed under digital service tax. So it touches on several income streams. So automatically then there was, of course, there's been an issue on those who are betting, those who are used to languages like goal and double chance. They always put in something, they look at the odds on the other day. I know our Harambee Stars were playing today, so you might have found that some of those platforms would have said, if Harambee Stars win, then there's some odd of 1.5, meaning if you put 1 shilling, you get 1.5. So when you win, the law requires you to pay, there's a withholding tax, which is supposed to be paid by the person who is providing you the platform to bet. So there's been an argument on what is the meaning of winning. Does winning mean what I'm grossly paid by the platform or the betting company, or I need to remove what I put in as I was betting? So the definition is clarified that when you, the definition of winning is what you have received from the betting company minus what you put in. In other technical languages, we call them a winning minus taking. We call it a stake, but we can avoid that language for now. Then there's also a definition of immovable property and related persons. What happens is, if you look at the definition of immovable property, it was only housed for purposes of capital gains tax. But that definition is used severally in the law, including for purposes of taxation of trusts and settlements. And that definition in the older days did not have land as a definition. It only had the things to do with petroleum, things dealing with the extractive sector. So it has just been broadened. And of course, there's also definition of a related person. It has been there, but now it's a bit clarified. Then there's also the issue of foreign exchange, and this touches on companies which have forex, and our shilling has been a bit depreciating against some major currencies, the euro, the dollar, and all that. What happens is, if you bought something, for example, on credit, on that day you will invoice and book your invoice at a certain exchange rate. By the time you come to pay after the credit period, you might realize that you are going to pay more money, okay? By virtue of either the shilling has depreciated, so you're paying more dollars, and that puts you in a situation where you are literally paying more because of the foreign exchange. So what happens is the law has a provision in the Income Tax Act that does not allow you to claim a certain element of the foreign exchange, okay? And of course, there are mechanisms on how that is done. So the law clarified that you are barred from claiming that foreign exchange in line with other provisions that have been provided in 2022, what we call based on earnings before interest, taxes, depreciation, and amortization. But allow me go direct to the employment income. There are very good provisions for employees that have come with this amendment of the Finance Act of 2023. Number one is that ordinarily, if an employer gives you money to go outside your usual place of work, some people call it per diem, others might call it, an out of pocket or out of office allowance and all those other names. Originally, the law only gave you exemption of 2,000 per day. So if, for example, KRA is sending me to Mombasa for some work assignment, and I'm given so much money to go and spend, 10,000, for example, for 3 days, the law assumes that 2,000 per day would be reimbursable. That is the original law before the amendment. But it has also been noted that that amount was not in sync with the current living standards. So what happened? The law was then, streamlined that the rates are now the ones used for AA, because AA also has international rates. So to look at what is not taxable, you check the AA rate. So if an employer gives you more than the AA rate, then that would be deemed to be a chargeable income for purposes of employment income. So it is added together with your salary and then taxed like any other. And then we also had the issues of club entrance and fees, which in 2020 was the employers were told if you pay for your employees club entrance and subscription fees, it will not be allowable against your income. Okay, but that meant that when it's disallowed, it's like it's taxed. Okay, so the law now is amended just to streamline it, to make it that if the employer doesn't claim it, then it is deemed tax, so you are not taxed, so that to avoid double tax. If the employer claims it, then it is chargeable as part of employment income. And then there's a whole nuances around determining the market value of a share. You know, there are certain employers who grant employees shares just to ensure that the employee aligns with the mission of the company and the employee feels part of the company. So what the act is saying is that there's a way of determining the market value of the shares, especially where you are given shares by an employer and the shares are not in a quoted market. The shares are not trading, for example, the Nairobi Securities Exchange. And then another very important amendment was dealing with employees who are joining a startup. You know, in the current era, getting technology savvy employees is not easy. They are actually a rare commodity. So what happens is, if you start a company, and it's a company that, for example, is an IT solutions company, and you want to attract talent, you might not have the salary to pay that person who is coming in as an expert. But you can tell the person, I'll give you nominal shares, and that should take care of the salary. According to the law, when you did that, the shares will be charged as an employment income to the expert immediately. But recognizing that many startups face challenges with the cash flow, they might not be able to pay the requisite pay-as-you-earn, then the law has allowed those types of companies, and of course there are guardrails on how to define what a startup is that the payment on employment income or pay will be deferred for at least 5 years, or when the employee leaves the company, or where the shares are liquidated or sold to another person. So this is just to, jumpstart and give some leeway to startups to help them mobilize capital and also to attract talent at the same time. And then there's the issue of taxation of permanent establishments. Allow me to bypass that for now in the interest of time.
Sorry, Mr. Nickson.
Yes.
Your slides are not moving. Would you mind maybe to project it in a movable
Are they
slide?
moving now?
Not yet, unless Sidandi from
Maybe
your
try
end?
stop sharing and
right.
reshare. Let me see. Better?
Try moving them. You see?
There we are.
Still not yet from my end. Sidandi? Not yet.
Not yet.
Not yet. They don't move at all.
No. On the
yeah, they are.
They are now.
Moving now.
Now they're
Yeah.
moving.
I think they have insisted I remove the presentation mode.
You can.
Yes.
Oh, right. Have you tried doing the slideshow?
No, I'm not doing the slideshow. I was just putting it in the presentation mode.
Oh, okay.
I think it's okay. It's fine now.
Perfect. Yes.
Okay.
Please continue. Sorry about
wonderful. So I was saying there's also the element that very important for purposes of the income tax. There's the introduction of taxation in Kenya has especially for income tax and for business persons, there are two regimes. I'm talking about the second bullet, where if you have a small business, we take you under what we call turnover tax. And it's a simplified way of taxing in the informal economy or smaller companies or smaller entities. So in 2020, the law was changed to tax them at 1%, and the threshold was also raised to 50 million. This law, because COVID is now, at least managed, and at that time everything was done in response to COVID, then the law has been amended to take into consideration the current happenings by lowering the threshold for those who are under turnover tax from 50 million to 25 million. And the rate has also been increased to 3%, because the rate then of 1% was to assist businesses go through the COVID-19 period. And now that the COVID is done, then the rate has been increased to 3%. Allow me to spend maybe just a few minutes here, a few seconds. If you are doing sales, you have, let's say, a shop somewhere in town, in one of these malls, and your turnover is below 25 million. What the law requires you is that every month you compute 3% of the 25 million. And that is what you pay as tax. There's no other income tax that you'll be required to pay. But if you're making a turnover of more than 5 million, you'll also be required to have VAT. So actually turnover tax and VAT can operate side by side depending on your turnover. And no other income tax will be required of you once you've paid your turnover tax, which is a monthly at 3%. The maximum threshold is 25. Below that, you can pay up to 1 million. And then there's also the issue of digital assets. I think this is also at the heart of many young people. Kenya is ranked as number 5, actually number 3 in Africa in terms of those who are trading in cryptocurrency. The Bitcoins, the Ethereum, the Litecoin, and all those other coins. And so there's a feel that everybody should contribute. Everybody should shoulder a fair share of their tax, because these same people are in Kenya and they're utilizing government resources. You are employed and you're also contributing in terms of pay. So those who are making money through such platforms, the digital platform, should also contribute. So the law has been amended to then require that any transfer or exchange of digital assets. So if I have a few Bitcoins in my wallet, when I exchange those Bitcoins, either to another coin or convert it into money, then there's a 3% that is required to be paid. But this 3% is to be paid by the wallet provider or the platform provider. So that is a short on the digital asset tax. And then, of course, there's been a cry under what we call the fourth schedule. In the fourth schedule, a number of financial institutions are listed: mortgage companies, credit and society, banks, insurance companies, building societies and all that. In the olden days, the law only allowed somebody to claim mortgage interest, which currently is up to 300,000. We call it a mortgage relief. Of what you are paying if you are having a mortgage and you're staying in your house. We call it owner-occupier interest from the first 4 financial institutions. And unfortunately, cooperative societies were ranking number 6, I think 5 or 6, I think so. So what the law now provides is that because SACCOs have also transformed how they do their businesses, they also offer mortgage solutions. So you as Kevin, you can go to a cooperative society, get a mortgage, and once if you are servicing your mortgage in a house that you are actually occupying, then at the end of the year when you are filing your return, the law allows you to claim 300,000 of interest that you paid. That is the maximum that you can claim from that mortgage servicing and the interest element. So this is a welcome move just to show up, many Kenyans owning their homes and also the take up of mortgages in Kenya. Then a very important one, very key for many businesses. Many people believe that, and we have believed that ETR, as we used to know it, and now we changed it to TIMS, which we have again transformed to what we call eTIMS. That is the tax invoice management system. We are coming from a gadget-based, which is TIMS, to an electronic basis, which is free. Actually, where I'm sitting now is the bed of where the applications are being sorted out if you have any challenge. The law has been amended in a way that eTIMS will not just be for VAT only, but also for income tax. Actually, later when you look at the Tax Procedures Act, you'll see that eTIMS will also be used even for landlords. So for purposes of this specific amendment in the income tax, the law will require from January. So from January 1st, somebody will only be required to claim, somebody will only be required to claim an expense if that expenditure has been incurred, and 2, you have evidence of having incurred it through an invoice, and 3, the invoice has been generated through the electronic tax invoice management system. So I think that is a very important thing to note. I want to avoid the issues about EBITDA and loans. We can discuss that. Confirm if the slides are moving, Kevin?
Sorry,
Kevin?
no, they've stopped again.
Are we somewhere where you're able to see at the bottom December 2023 to 2024?
Unfortunately, we stopped at, yes, now we are there. Now we are there.
Good. Good.
Yes.
I think we'll just try and work with it the way it agrees.
No problem.
I've already mentioned about the members clubs. I don't want to belabor. Very important is the 5th bullet. This is key for many people. All of us will retire at one time. And those who have listened to the former CEO of RBA, Dr. Odundo, he has you can watch it on YouTube. He talks of how important medical insurance is at the point of retirement. And because the government is alive to that fact, a law has also been put in place through this amendment that if you are contributing into a post-retirement medical fund, you actually get a relief like the others who are contributing to insurance. You know, the one we contribute for life, education, okay, or, health. Those ones that are mentioned in the law. So this post-retirement medical fund, you also get a relief, but the maximum can only be 60,000 of the premiums you are paying. Later, you'll even see that there's also the amendment following that, where income earned by a post-retirement medical scheme is also exempt from tax. So this is just to ensure that our retirement time is secured. We have enough at that time. Very quickly, the law has introduced withholding taxes on two main items. Any entity that is now doing sales promotion, marketing, advertising. For example, if a charity decides they want to market their services and they go to a marketing agency and pay for purposes of being visible, either billboard or on print media or on audio visual or even on the internet or somebody's website, and you are paying for that service, we require that the person you are paying, as you will be paying the person, you withhold 5%. That is the same thing when you are paying a non-resident, somebody who is not in Kenya, the law from 2020 requires you to withhold 20%. And then we've also introduced digital content monetization. I think we all know this class of people for the social media influencers. There's a digital content withholding of 5% and for non-resident also 20%. But in addition to that, the laws has also been amended to require that the commissioner can appoint some people, especially agents, to be withholding tax agents for rental income. So if, for example, I have Nickson and agencies which manage property, then KRA can appoint me to withhold rental income before I remit the rental income to the landlord and provide for it. And again, all withholding taxes, the due date has changed. We were used to by 20th of the month, following the month in which the payment happened. Now, all withholding taxes are required to be paid within 5 working days. And this is just to try and manage liquidity of people. If you are given, if today I earn money and I'm told I wait for 50 days to pay tax, most likely by the time I get to the 50th day, I shall have used the money. To help me manage that, the law says, no, within 5 days, once I get that money, then I need to pay the withholding tax. It's a good way of managing cash flow, and of course, for the government as well. I'm moving a bit fast now. I've talked about a few exemptions, which I don't want to dwell on. They're also very important in this table. Amendment, see my time is also fast flying. Amendment to also introduce 2 new rates of tax. And this is in a bid to tax what we call wealth. So if you're earning 5 million and above per year, you can divide that by 12. The rate goes to 32.5 instead of 30. So there's an additional 2.5%. But the moment you click 800,000 a month, actually the other one is 500,000 a month. So anything between 500,000 to 800,000 there's an additional 2.5%. And if you're earning more than 800,000 a month, which translates to 9.6 million a year, then your income now goes to an additional 5%. So you'll not be taxed just at 30%, but it's also at 35%. Allow me to go into VAT, a few amendments just to clarify. Also very important for us to note. We know that petroleum products for a long time have been taxed at 8% VAT, and VAT is a tax on the final consumer. That is why when you go to a shop, you buy something that is subject to VAT, you'll always see there's a mention of VAT rate at 16%. Then you have the total price that you pay. So the petroleum products, the rates have been changed to 16 to harmonize with the other rates. And then, of course, in line with the bottom-up transformation agenda, VAT on liquefied petroleum gas has been removed, making them actually zero-rated. So they should be cheap, and I'm sure most of us have experienced a bit of that. Then another very important clarification is there was a lot of hullabaloo about compensation by insurance. I once listened to some people saying that if I'm injured at my workplace and I have a compensation under the Workman Compensation Act, then KRA will be coming for a portion of that tax. I think that is not the truth. What happens is, if you have stock which are vatable and you are registered for VAT, remember you only register for VAT upon 5 million threshold, or you can voluntarily come forward to register. So if I have stock which I bought and I was charged VAT, the stock is damaged and insurance compensates me, then there are 2 scenarios. If they compensate me with VAT, then I need to remit the VAT to the commissioner. If they compensate me and the VAT is not clearly stated, we'll assume that the compensation is VAT inclusive. And this is just to ensure that someone does not claim VAT twice on the same supply that has been made, given that maybe, you know, the stock was either damaged, lost, pilfered, you know, or became obsolete and insurance compensated. Then allow me to leave some of that. Now that the presentation has to have to keep on living and coming in. There are a lot of other provisions. I think I'll share the material with you. You can see a lot of exemptions, a lot of zero rating, okay? Exportation of taxable services. This was debated for long. If for example, today I get a consultancy in Uganda, do I charge VAT or it at zero? Actually, it is now at 0% as per the Finance Act. And many items are here. On the issue of excise duty, the minister, the commissioner was allowed to do annual inflation every year, adjustment, because some of those rates of excise are what we call specific, meaning you find maybe a bar of chocolate is 10 shillings per kg. So if there's inflation, then it means the taxes being collected are lower, okay? So there's always the need to do inflationary adjustment just to keep up with the current economic levels. And that is the power that has been taken away from the commissioner. And of course, there are also electric motor vehicles where they will not be charged excess duty in line with going green. All of us are aware last week, we had the African Climate Summit, and a lot of it is to ensure that our climate and environment is kept clean. That's why we are trying to use more clean energy in the process. So there's a list there about rates of tax, which I think you'll get the material and look at them on betting and all that. I don't want to dwell. I want to talk about the Tax Procedures Act, just two provisions that are very important for mentioning. One, in the past, the commissioner has had powers under Section 37 and Section 89 of the Tax Procedures Act to waive or abandon tax. I think almost all of us at one moment have applied to KRA for purposes of waiver. Either you feel the obligation was put to you wrongly, or you just failed to pay some tax, or you filed your return late. So the commissioner was empowered based on certain metrics to waive taxes in that manner, provided you come forward and explain why you failed to, fulfill your duties for purposes of penalties and interest. Then the commissioner and the CS were also allowed to remit or abandon taxes. So there are cases where you can't just pay the principal tax. It's not about the penalty or the interest. So they were allowed to abandon the CS actually finance. But now, because of the law and the constitution, Article 210 of the constitution, to be in line with the constitution, because it meant that the Tax Procedure Act was inconsistent, those two provisions have been deleted. So that now behoves us to keep our taxes proper. So we should take keen interest in our tax, due date, amount to be paid, we file correct returns, because as it is, if you make any mistake, you will not be pardoned. There's no waiver, there's no abandonment of taxes. You will be required to pay. So that is one very important amendment that has happened. But again, to cure past sins, so that we can all start on a clean slate, the law has also been amended to allow every Kenyan from 2022 December going backwards, if you have any interest, penalty, or a fine in your ledger, you are required to come forward and get an amnesty for it. Okay, and the amnesty ends in June 2024. So the earlier we come, the better. So if you have any tax to be paid, you will pay the tax, or you will come to the commissioner and agree how to pay the tax, then apply for the waiver of the penalties, interest, and fines. But if you don't have any, based on the guidelines that were shared by KRA that must have been early last week or the week before last week, then it will be automatically wiped out. So let's take keen interest on this amnesty, process. I want to run away from the TPA for now and rush into, there's also the miscellaneous fees where a lot of IDF, the import declaration form, the road development levy, railway development levy, a lot of items have been removed from it or the rates have been lowered. Actually for IDF, it's coming from 3.5 to 2.5. So that is important. One very important act that has been amended and it has been in our lips for long is the Employment Act of 2007. So the Employment Act has been amended through the Finance Act to provide a 1.5% levy on an employee's gross monthly salary to be matched by the employer. Okay, so you pay 1.5, employer matches another 1.5, and it is due just like for pay as you earn within 9 working days after the end of the month. And of course, KRA also gave guidance that when we talk of gross monthly salary, we are looking at regular payments availed to you. And when you go to the Employment Act, an employee is not just a permanent employee or a casual, even somebody on attachment, somebody on internship, learnership is still considered to be an employee, and anything given to that employee, whether it is a stipend or a salary or a wage, is still subject to the 1.5%. Many people read the affordable housing levy in the eyes of payee. Remember, payee is in the Income Tax Act. This levy is in the Employment Act. So you read it in the eyes of the Employment Act. And I think there's been a lot of guidelines given by KRA, but where you feel there's unique circumstances to you or your business, Section 65 of the Tax Procedures Act allows you to write to the commissioner to be guided on how to go about specific taxes. Maybe, for example, the affordable housing levy. You have non-executive directors who withdraw once a year. Is that regular? Or they withdraw salaries twice or thrice a year. Is that regular? Or somebody who is given sitting allowance, university boards, okay, or a board or a company board of directors who sit 3 or 4 times a year. Is that regular? I think that is very important to note for purposes of this Finance Act amendment. So with that, allow me to stop the sharing and the presentation, and then we can then pick questions and comments. Kevin, back to you.
Thank you so much, Mr. Nickson. Today's topic from the comment section, I can attest that it has evoked a lot of emotions, and this can be agreed on by Grace, who I can see is already back online. Grace, can you hear us? Okay. Already from our Q&A, we can tell that there is a lot of concerns that are coming from our viewers. Question already from
Kevin, I'm here. You cannot hear me, Kevin?
Now I can hear you. I'm sorry. Your internet today is a mess.
Yani, I'm wondering how I'm missing out on very important, considering I am both an employer and I'm an employee. I am very suffering.
You're already suffering.
I have suffered, Bona. Nickson, all these taxes, one person, just me one person. By the way, what is KRA doing about just making sure that we are not feeling so bad about these taxes, just off the cuff? Okay, it can't be off the cuff. We are recording this conversation. Fine, let's move on. So now,
yes.
Okay, Kevin, you can just read out what's on the chart.
All right, let me just read a question from the Q&A section. How can employees, this is a question by Caroline Gerono. How can employees track their housing levy contribution? And is there a way it can be tied to Boma Yangu? So that if you are registered, you'll be able to see your balance and also register to own a home.
I wish
to take a number,
yes,
or
yes.
should I just
I can pick a number so that we also save on the time.
All right. And then the second question is from Lucy Njoroge. Does the turnover tax relate to consultancy services, given that they pay withholding tax of 5%? I think the third question would be from Paul Maina. How will the amnesty be implemented? I think we can take the three and then we move forward. Back to you, Nickson.
Wonderful. I think they're very good questions. I want to ask, I know my colleague is listening, Wanja. If possible, she can share the public notice that was issued by KRA with respect to the amnesty. Then all of us can look at it. I think that will give us a better way of implementing the amnesty. Number one, on the Boma Yangu, all of us are aware that when the housing levy debate started, first it started as a fund, then it went into a levy, and finally it came as a tax. If it was a fund, then it would have been very easy, as our dear participant asks. Then what would have happened, we will have tracked how much have we contributed. And then it links to the affordable housing relief, which is the Boma Yangu. Remember, affordable housing relief, if you are paying it, that's the old one, you actually get even a tax benefit, 15% of what you are contributing up to 108,000. But for this levy, the affordable housing levy that was brought through this Finance Act, it is a tax. And it has no connection to the Income Tax Act, where you can claim it as an expenditure. So that is the flip side, okay? And once it's a tax, it goes into the consolidated fund, and it is handled by the government like any other taxes that the government receives. So just know that it is not a fund. But if you want to track how much you are paying, unfortunately, you might need to check your ledger, or you might need to check with the Ministry of Housing how much you have paid. Because remember, the employer does the declaration, and it's paid separate from the pay as you earn. Though in the return, it is captured together with pay as you earn. So you should be able to see it, but I'll confirm that for you. On the turnover tax, remember, turnover tax is for informal businesses, small businesses. Let me call them MSMEs. In the turnover tax regime, there are also exemptions. The law says if you are between 1 million to 25 million, you will be under turnover tax, 3% per month, end of the story. But there are also people who are not allowed to be within that regime. And unfortunately, from our dear participant, consultancy business is one of the exemptions to turnover tax, meaning if you have a consultancy business, or you are running a bank, a financial institution, a bank, an insurance company, or rent or income, you cannot be under turnover tax, whether it is monthly or annual rental income tax. So I think that is clear. But whether you are running a business as a company or using business number, you can be under turnover tax, provided it's not consultancy. And then on the amnesty, yes, the amnesty is to be, there are guidelines provided by KRA already. Let us take advantage of the amnesty on how it will be done. If you don't have any principal tax owing, and all of us have the benefit of looking at our ledger and confirming whether we are owing or not. If you're not owing any principal tax, there will be an automatic waiver. The fines, penalties, and interest will be wiped out automatically. But if you have any payment to be made, then first of all, make the principal payment and then apply for waiver or for the amnesty on the principal, on the interest, sorry, on the interest, on the penalty and the fine. Or if you don't have the money now, might be 5,000, but you're not able to, you can't pay it in a bullet. You can come to KRA and we're always very willing to listen. You get into a payment arrangement. You can tell me you'll be paying 1,000 per month. And then from there, then the rest of the penalties, interest and fines, and then are then automatically waived. They're actually waived away, sorry. But you'll need to make an application. Back to you, Kevin.
Thank you so much for that feedback. There is a very critical question here from Patricia Ann. What should employers do to caution employees to avoid possible violation of the third rule? That is because we have NSSF, NHIF, housing levy, say around 4.5 sudden deductions. That is question number one. The other question is, in a situation where one has two employments, should both earnings be deducted? That is on the annual housing levy separately. That's also a question from Gordon Ramogi. The third question should
Kevin.
Yes, Grace.
I have a question. I'm with Carol Njangiro, who said, please repeat that part for part.
Sorry, Grace, you are
Can you hear
breaking.
me?
You're breaking terribly.
Okay, I don't understand. And
Now
I'm
you're
at
back.
home.
Now you're back.
Yeah, I'm asking
Yes.
Nick to repeat the per diem part, and I would like to ask Samuel Mwangi to ask the question. His hand has been up for quite a while.
Okay.
Samuel
Nick?
Mwangi, you can unmute.
So Kevin, we can take that fourth one, then I can provide the answers.
Yeah. Okay, as we wait for Samuel and Wanja Wongodu to at least admit from their end. Last but not least, let me see. Okay, now this one is not really a question. Okay, is there a minimum amount of income that is taxable for the housing levy for employees, like in cans? That is also another question from Eunice Gishuki. Back to you, Nickson.
Okay, allow me to address that very quickly as I wait for Wanja. Wanja is actually my colleague. Maybe there's something she needs to clarify. We'll give her time.
Great.
I think all this third issue and if you have two incomes are tied to the housing levy. Remember, it's the same Employment Act that talks about the third rule.
Yes, Grace?
Yes, Grace.
Apologies, my internet is totally misbehaving. I had promoted Wanja to, because you had said there's something she can share, but if she doesn't have it, it's fine. You can continue, Nick.
Okay, no problem. I'm sure she might share in the chat box, or we'll give her a chance to share. Now, so it's the same employment, and you know, KRA doesn't monitor whether you are below or above the third rule, unfortunately. So what I've seen is many employers becoming a bit, innovative and just seeing ways in which not to abrogate their third rule and also not to adversely affect the employee. But unfortunately, there's little that KRA can do about it. The law is there, KRA is the collector. But remember, the law is under the Employment Act to be administered by the Ministry of Housing. So I think that is the only answer I can give with respect to their third rule. For secondary employees, or if you have two employments or two sources of income, remember the levy is on employment income. So if you are, for example, working for KRA as Nickson, and then in the evening you also you are a lecturer somewhere employed as a lecturer, there's no cap for how much or the maximum levy that you pay. The law simply says 1.5% of your gross. So KRA will remit the 1.5. The university in which I'm lecturing will also remit their 1.5. So there's no cap. And that's why I advise, don't look at the housing levy in the same eyes as employment income under income tax. The principles are a bit very different. And so even if you are earning wages, and I mentioned it earlier, you are also subject to the housing levy at 1.5. So if, for example, you work in a place and you are a casual, at the end of 2 weeks or at the end of the month, the employer is required to still deduct the 1.5. It doesn't look like the payee where up to 24,000 is not taxed. This is different. There's no floor, there's no cap on the other side. Somebody had requested I repeat the per diem question, which is okay. What I was mentioning is that if you look at how the employment income is taxed, employment income is both cash benefits and non-cash benefits. And the cash benefits, some are very direct to deal with, but some are not easy to deal with because employer gives you some money for purposes of going outside your usual place of work. So some people argue that is reimbursement for purposes of the employer. And so per diem specifically is for purposes of, you're going to sleep outside your usual place for 1, 2, 3 or so many days, and the employer facilitates you. The employer can give you fare, he can give you meals, and more so an out-of-pocket allowance. I think some people call it so. What the law provided is that you could then bring your per diem policy to KRA to confirm that indeed it is a mere reimbursement of the cost you've incurred. But if you don't do that, then the law required you that up to 2,000 per night is deemed to be reimbursement. Anything above is then subject to tax, just like your salary. So if you are given 5,000 to go to Mombasa and it's 3 nights, then 2,000 per night for 3 nights will not be touched. Anything above is what will be taxed. But you see, 2,000 looks low by current standards. So what the law has done is to say that we will use the AA rates. What AA provides for per diem rates, and some companies' policies are actually aligned to the AA rates. So we are moving away from 2,000 to use the AA rates for purposes of benchmarking or checking whether the per diem is reimbursement or not. So if an employer gives you something that is above the AA rates, then that will be deemed to be part of your salary and subject to further taxation. I hope that clarifies, Kevin.
That's very much clear. I wonder if Samuel is still around to ask any further questions. Grace, might there be a question from your end before we can continue?
Kevin, I have given up.
All right. Great. Then we can move forward, Mr. Nickson.
I'm just here following.
This seems to be a concern from Catherine Wekesa. Your e-teams personnel do not seem to, or rather do not pick calls for the last 2 months. She's tried calling all the 6 numbers, but no one picks. Can you help us get numbers that are manned? And Agwing Sabala, what about if you are on assignment, not from your employer? How then how then can you be able to pay on such? I'm just trying to find out examples. Umetumwa na sako. Okay. Okay. I think that one, Mr. Nicholas, you can answer those as I try to get other questions from the team.
Okay, thank you. Very, very interesting question, but I would prefer that Agwins can add more meat to the question. There seems to be something hanging about the question. Is umetumwa na sako. So it's like
Okay.
if you've gone on assignment
Yes.
and not for your employer. Still, I don't understand the question. And maybe he
Okay.
can give more details.
As he's going to do that, there's
Yes.
a question here from Peru. Just to
I wanted
confirm.
to address Catherine's. Yes, Kevin.
Okay, sorry about
Yes.
that. Let me
Yes.
just add you another question
Okay.
as we wait for Agwins to strengthen his question. Just to confirm, are companies making above 5 million subject to TOT and corporate tax? And then please confirm if e-Teams is applicable to all and not only VAT registered companies. I think those would be enough questions as we wait for Agwin's question.
Okay, thank you. I think they are very good and illuminating questions. To Catherine, I'm very sorry if you've been calling the toll-free numbers and you're not able to go through. You have alternatives. One alternative is to write email. You can write an email to KRA. I think it's public. You can get the public lines. You can also do an email to cic@kra.go.ke so that your matter can be looked at. There's also a third option where you can walk into 8th floor of JQuat Towers. That is where the implementation team of e-team sit. They can sort you out. But the teams are also available for support in all KRA domestic taxes offices around the country. So if you're in Mombasa, you can always visit the KRA Mombasa office. You'll get officers who will assist you, but that will require you to be physically present there. If you're around Times Tower, you can always go to 14th floor, you'll be assisted. In Samia, there's a whole office, you'll be assisted in a number of floors, the same as when you are in Upper Hill. So there are a number of offices that you can be assisted. But I think we have said my colleagues are also here, they have picked your issue. You can actually, you can privately chat with Wanja. She'll be able to pick your details for maybe further consultation and facilitation. Then on the TOT, I said that turnover tax is an income tax, same as what we call corporation tax. You cannot be on turnover tax and also corporation tax. So if you are not excluded, as I mentioned, a bank, an insurance company, or consultancy, or rental company, then you can be under turnover tax. When your turnover is below, currently now we are talking about 25 million, but originally it was 50 million. That can also allow you to be under VAT. If your turnover is 5 million, you are supplying vertible services or vertible goods, then you can have TOT and VAT. What has been confusing a lot of people, Kevin, is that before 2020, the threshold for turnover tax and VAT were the same. So you could not be in turnover tax and VAT at the same time. But the moment those thresholds were staggered, where VAT maintained at 5 and turnover tax moved to 50, then it means you can be in both VAT and turnover tax, but you cannot be under turnover tax and the annual corporate tax regime. And then on the e-teams, I mentioned that traditionally since 2006, ETR has been for VAT compliance purposes. But we have noted, and that is why the law also changed, that e-teams can be used for all tax heads. So as it is, the law allowed commissioner from September 1st to implement an electronic tax invoicing system for all businesses, excluding those who are importing salaries or cases where there's depreciation and all that. So there are certain clear under the law that should be, I think, section 23, which have certain exclusions from e-teams. That means the commissioner has the powers now to implement e-teams on all businesses, for TOT, for Mama Mboga, for a big company, for somebody who's not registered for VAT, for a rental person, you'll be required to onboard e-teams. And that is why the law then proceeds to say, from 1st of January 2024, if you are a business person and you want to claim an expenditure, the law will not allow you to claim that expenditure unless you incurred the expenditure, you have an invoice that you indeed incurred the expenditure, and the invoice has been produced through e-teams. So I think that is important to mention. Back to you, Kevin.
Wow. At this moment, I feel like everyone's on the Zoom call to be having a question that is triggering. The more we talk about this, the more people's, or rather, our participants' emotions are evoked, and the more everyone feels to be a part of this. Once again, allow me to recognize our partners, that is Stallion Construction Company, Purchase Solution Services, Panessa Training Institute, We Clean Company, Suluhu Mediation Center, Kulabintito, Profiles International, Steadfast Quality Solutions, Eastern Park Limited, Elsamere, and Labor Planet. We thank you all for making sure that this Zoom call is available to our participants. On to the next question, Mr. Nickson. What is the flip side or good news in all these taxes? Just to avoid alarming sensation going forward, what will be the benefit to taxpayers, and what is the impact of the Finance Act on private pension schemes, early retirement? That is a question from Patricia Ann. And actually, just to add on it, as she's, or rather to put more emphasis on it, what should we as taxpayers, you've from your earlier introduction, you erased the name taxpayers, but rather you called us stakeholders. As stakeholders, what should we expect from KRA?
Very good. I think they are very good and good questions that will also assist KRA, of course, to better how we relate with our stakeholders and customers. Allow me to start with Patricia. Remember, I started by saying that KRA is an implementer of the laws that have come out of Parliament. KRA doesn't make any law, and the Constitution will actually be very hard on us if you were to take on that role. In any case, we don't have that role. So it is a Parliament that manages the government resources to ensure that they are used efficiently for the benefit of Kenyans. And we are also aware that continuously the government expenditure continue going up, and therefore we need to collect enough by either expanding the tax base or deepening what we call the tax base. Those who are supposed to pay should pay more. And if you look at this Finance Act keenly, apart from a few introductions like the housing levy and a few others, a lot of it goes into strengthening compliance, ensuring that those who should pay and they have not been paying then are forced to pay, so that all of us, we contribute to tax. And that is the only way in which we can develop our country. Remember, tax operates in a very cyclical manner. The government collects, then spends by plowing it back into the economy. Businesses use that same money, multiplies, the government collects, and it's like that. So if the government doesn't collect enough to plow back into the economy, I don't think we'll ever grow as a country. So it's part of our patriotic duty to pay our fair share of tax. A lot of alarming sensations, I think you're right, Patricia, but I've explained some of them because you find a lot of half-truths and lies on what the law actually said, like what I mentioned on insurance compensation. Somebody was saying if you get an accident and with your car and the insurance company is paying you, it gets lost and you are being paid, that KRA will demand 16% of the tax. And I think that is part of why we do stakeholder engagement, so that we are very clear on what the law is. Then on the impact on private pension schemes, I don't think the Finance Act touched on pension schemes. It's a very wide topic. I would not want to dwell on it today. But if a pension scheme is registered, there are a lot of benefits, either you as a contributor or when you retire and you are now commuting any money out of that retirement pension scheme. And all pension schemes, the rates have maintained. The rates have not gone up like the 35 and the 32.5%. So I think that is also something that is that should come out very clearly. The rates for pension when you take early retirement, or the rate when you take upon retirement, and also when you meet certain criteria, the bands are actually expanded. Then what do Kenyans expect with the tightening, loopholes where some people feel they should not pay while others are paying? We should see a higher collection of taxes, which then translates to more development for the country, and the government meeting, of course, its budget, which is usually set out. Thank you, Kevin.
Great. Thank you so much, Mr. Nickson, for at least guiding us through the Finance Act 2023 as you prepare for your parting shot. Allow me to take just one last question, and this question is coming from Ngoya George. What is the position of housing levy on employees who already have mortgage loans and employees who are retiring in a few months' time?
Thank you, Kevin, and thanks, George, for this. Remember, I started sometimes back, I said, when the debate on housing levy started, it was a fund. And of course, we all know why we were told we needed to contribute. I'm also an employee. And then we would have gotten houses. But because people felt, no, we don't want that fund, then it was transformed into a levy and a tax. And so the moment it goes into the coffers, it's just like any other tax, just like employment or just like VAT that you pay. So for now, George, it has no relationship with the mortgage loans, okay, or even your retirement. So long as you are an employee, whether casual, permanent, on attachment, you pay 1.5% of your gross monthly salary or gross earnings, and that is it. So it has no relationship with the mortgages that you're serving. The debate was, yes, before the law was in the finance bill. If you're paying the housing fund and you already have a house, what was the need? But the moment it transformed into a levy, then that debate is actually negated, George. So for now, it is a levy, just like any other tax. Let us support the government in payment.
Okay.
Yes, Kevin?
There are two hands that were raised up from Paul and Ngoya. George, the first person to unmute themselves can talk. Paul Ocheng, Ngoya, George, if you can hear me. All right. It seems that they had raised their hands without knowledge. Nonetheless, back to you, Nickson. Your parting thoughts.
It will be, I think, in twofold. One, let us take advantage of the amnesty. There's been a lot of amnesty. In 2015, we had a rental amnesty. 2017-18, there was foreign income amnesty. There's an amnesty that is actually still running on 25% penalties and interest if you had any taxes owed by the year 2020. It's been running since 2021. And I think, I don't know whether it's a Kenyan issue, there's a bit of lethargy, but now that we have an amnesty that does not even require procedures, this is our chance to take up the amnesty program so that we clean our ledgers, we clear our issues, and then we start on a clean slate. That is one. Number two, as a government agency, we always urge every Kenyan to be compliant. Pay your fair share of taxes. And where possible, we even have a law, Kevin, where if you know your neighbor is not paying, and you have evidence, you can actually be paid handsomely once we collect that tax from your neighbor who is not paying under what we call a whistleblower program. So if you can go to our website, you'll find all the mechanisms on how to whistleblow on those Kenyans who are happy seeing others paying. They're enjoying our very good, infrastructure in the name of expressway, but they don't want to pay their fair share of tax. You actually also get a share of that tax we'll collect if you're able to whistleblow appropriately. And lastly, I think paying tax is our civic duty. Tulipe ushuru, alafu tujitegemee. I think that will be my parting shot for this night. Thank you.
I'll hand over back to Grace so that at least I know if you can be able to say something. Grace, back to you.
I have no idea whether my internet will behave today, but myself and a few others on my inbox have really suffered tonight. But Nickson, that was an amazing, amazing presentation. Thank you for enlightening us. Thank you for just even demystifying some of these things. You know, some of these things, when you watch on the news and the accountant is not there to demystify for you, then you might just get lost within it. So thank you so much for just agreeing to come and do this with us. And I look forward to probably getting the notes so that we can share with the people. And then, of course, we will share the recording with our audience. But let's keep getting better. Let's keep getting it right, you know. Henry, I know you said you do not want to get it right. And I suggest you keep getting it right. You don't have to share your email address. If you registered for this, we have your email address. And it's easier to reach out to you that way because you can rarely keep up with the emails that come on the chat box. But Nickson, I just wanted to actually just appreciate you. Thank you so much for just sharing your knowledge with us. And I hope and look forward to having you again as we just keep getting better at implementing the tax laws. I know we cannot always get it right, but yeah, I mean, we keep getting better at it. And today I can confirm that we are more enlightened, and at least we have stopped fighting it. I think we are making peace with it. It's our Kenya, it's our country, and we need to do right by it. So Kevin, I don't know what else you wanted me to say, but I'm gonna hand, you are the host today. So today I'm your co-host. So I'm gonna hand back the program to you. You tell people to join our WhatsApp group. And good evening, Catherine. It was lovely to see you last week and always a pleasure. Tuonane very soon again. Back to you, Kevin.
Thank you so much, Grace. Definitely I couldn't have ended without giving you the opportunity to say something. To our viewers, kindly join our WhatsApp group that is Get It Right. My colleague Cynthia has shared the link with us. Join our YouTube page, Get It Right. Join our Facebook page, Get It Right with Atara Solution. Join our Instagram, Get It Right with Atara Solutions. And we are always honored to have you, always honored to share with you, and always looking forward to be with you each and every Tuesday from 8 p.m. Nowadays, we are no longer saying until 9, but rather 9:30 p.m. Looking forward to hosting you next Tuesday, same time, same place. We'll be able to share the topic of the day. And last but not least, thank you so much, Mr. Nickson, for sharing with us your knowledge on the Finance Act 2023. Thank you so much, Catherine, for making sure that you're always inclusive. And thank you, Grace, and all the Atara Solution team in making sure that we do this every Tuesday without fail. Without further ado, adios.
Thank you. Gracias.